Okay, so now we're in section four, which is a section about getting started in investing in real estate. So, in this section, we're going to cover a case study with my friend Sean Smart, and we're going to talk about watching out for scams, okay? Because a lot of people actually will look for new real estate investors and run scams on them. And basically, we're gonna get into a real case study of what happened in his scenario, something he told me about and has agreed to share. So we're going to talk about that. We're going to talk about in this video, should I fix and flip or buy and hold? So that's something that I've two strategies that I've actually used, and depending on what was going on, I decided to go one way or the other. But some of the other sections or lectures that I'm going to have in this section will be how much money do you need and where do you get it? Can you start investing with no cash on hand? Using cash versus financing your deals, establishing banking relationships, typical bank financing terms, hard money loans, using big banks versus small local banks, and finding a good realtor. So these are the things that I think you need to know when getting started or thinking about getting started in investing in real estate. So let's jump into this first lecture, which will be should you fix and flip or buy and hold? So for me, I'm going to just give you my background um, and why I decided to go the route of rental properties, which is buy and hold. And then when I started to go into fix and flip, I'm going to give you my rationale for why I just decided to start doing some fixing and flips. So, and then I'll give you my recommendations on what you might consider based on where you are in your life or as an investor. Okay. So, me personally, when I started out in real estate, I started out with the idea of buying and holding and renting properties, um, mostly because of the real estate market at the time. So, when I started buying investment properties, and when I say investment property, that means you can go either way with it, right? You can buy it and hold it, or you can fix it and flip it. But when I started buying investment properties, the market was down and it was bad for sellers. So for me, it was a buyer's market because housing prices were cheap. People were defaulting on loans. There were a lot of properties, REO properties, which is real estate owned by banks, and then there was a lot of property um, for sale by HUD, which is the Housing and Urban Development Department. And in my particular case, I owned a condo. You know the story, where I wanted to sell it, but the value had dropped so dramatically. I didn't want to lose that much money by selling it in this terrible market. So I saw it as a great opportunity to start buying and holding rather than fixing and flipping because there were not a whole lot of buyers and but there were a lot of sellers. You see what I'm saying? So it's basically a buyer's market for getting cheap prices. So my strategy was in a down economy or a down real estate market to buy and hold because you can basically buy properties for cheap and mortgages, their interest rates were lower. So that was another incentive for buying and holding because I could get mortgages at low interest rates and then rent the properties out for a profit because my mortgages were so low or the houses were so cheap that it was easy for me to get on average about $500 a month in profit, after expenses, renting the properties out. And then I knew in the future when the market went back up, didn't matter how long it took, I would have the option to sell some of the homes as the value got higher. So that was my rationale for deciding to buy and hold. Now, as the market got better, so when I started buying, it was like 2010 or yeah, 2010, 2011 is when I really started buying investment properties. Now it's 2018 now, and the market is high and it's up compared to 2010. So, what did I start doing as the market started coming back? I started I started doing two things. I started selling some of the properties that I had picked up for a huge profit, and then I took those profits and I paid down my rental property mortgages and paid off most of the mortgages for those rental properties. So now I have like a retirement strategy where most of the mortgages are paid off on those rentals. I'm getting more rental income, more profit every month as I paid off those mortgages. And so I'm trying to set myself up for freedom so that, once all those houses are paid off, I'll have enough money coming in every month where I don't have to work if I don't want to, right? So that was my strategy. As the market started getting higher, I started selling some of my rentals, paying off the mortgages on the remaining rentals. And as the market got hotter and there were more people buying, the prices went up. And so I still wanted to buy homes, but the mortgages were higher, so it was decreasing the amount of profit that I could make on buying and holding or renting those properties. So I saw it as an opportunity since the market was hot and there's a lot of people interested in buying houses, is a perfect opportunity to start buying flips. And so I started buying houses with the intention of fixing them and flipping them as fast as possible. So about a year or two ago, I started intentionally buying flips, and all of those flips that I bought, they sold in less than 1 month, and they also all sold for a profit of more than $30,000 in the low case, and probably $50,000 in the high case. So, and depending on your market, that range may vary, but I will not personally, I won't do a flip unless I can make at least $18,000 to $20,000 profit with my projections, because you could have one thing go wrong, one major problem that you didn't see in your inspection that could wipe out $20,000 worth of profit. So I won't touch it unless I can make that much, because then it's safer. Now some people are more risky with their flip strategy, but I consider myself a somewhat conservative investor. So that's the way I do it. But anyway, as the market got better and there's a lot of buyer activity, a lot of interest in buying, then it's a great opportunity to start buying or buy, fix, and flip instead of buying and holding. So right now the market is still up. I did, however, buy one rental property last year in an up market, but I got it at such a great price. It made for a good rental property, and I think the neighborhood where I bought the house in has tremendous upside in the future, so that if I want to sell it later, I can get much more than what I paid for it, even though I could flip it now. And what I typically recommend for you guys is, when you buy a property, buy it with in the right neighborhood, in the right scenario, so that you can rent it or you can flip it, depending on what's going on in your life and your circumstance. Because I've actually bought rental properties and actually flipped them because I just needed to pay taxes. Like I just needed money to pay taxes because I didn't want to owe taxes. So I bought a property, I bought three properties in one neighborhood, and I fixed them all up nice as if I was going to flip them, but I planned to rent them, just get the maximum rent. And my taxes came due, and I decided to flip one of those houses in order to pay off my taxes, and I made a nice profit off of it. Um, and then I kept the other two, and I still have them in my portfolio today, and this was years ago. Okay, so that's my 2 cents. But let me get into some of the structural things of this course when I thought about the answer to help you guys decide if it's a good idea for you to start with fixing and flips or buying and holding. So you got to ask yourself where you are in life. How much time do you have? Because if you don't have a whole lot of time, you're probably going to be less involved in your projects. So if you don't have a whole lot of time to be involved in the projects, then you might want to look at buying and holding, where you don't have to do a whole lot of rehab, getting stuff ready to flip and managing, contractors and all that kind of stuff. So in that scenario, you might want to look at buying and holding if you don't have a lot of time. If you do have a lot of time, you might get more involved in your flip and maximize the profit because you can do more of the activities, right? So the other question is, how much money do you have on hand? So basically, if I was getting started from scratch, um, I would, and I didn't have a whole lot of money saved up, I would actually start by doing flips because flips are a good way for you to get your cash built up and your emergency fund. And if you're going to be doing rental properties and buying and holding, you need to have some cash, a cash reserve around at all times to handle different things that pop up with rentals. Okay. So if you don't have a lot of cash built up, then a good place to start might be by doing several flips, get your cash up, and then you can start jumping into some of the rentals. Okay. And interest in real estate. So basically, what I mean by this is if you kind of feel like real estate is sort of a hobby, like for me, it's sort of a hobby. I have fun with it. And when I do the flips, there's no stress. I usually give myself enough leeway and time and money and budget and profit margin that I can take my time. There's no stress. I can pick my contractors and get stuff done on my schedule and then make some money. So, if you're doing real estate sort of like a hobby, doing flips can be fun. You just gotta manage things from the beginning and don't bite off more than you can chew. And what I mean by that is don't go buy the most expensive house to flip that needs the most work, and then you get in over your head and you don't know who to call to fix what and how much everything is going to cost. You might buy a flip that looks like a lot of things that you can handle with normal, easy to find trades like electricians or framers, drywallers, all that kind of stuff. All right. So, but if you really like real estate sort of as a hobby, flips can be fun. If you're good with numbers and project management, flips could be a good idea for you. If you need quick cash or extra cash, flips can also be a good idea. If you're trying to build long-term wealth or build a retirement strategy, which is why I actually got into investing in real estate, then rentals would be the way to go. Okay, you want to build out a rental portfolio. But I always say, remember this: when you buy a property, do the numbers and the evaluation for both scenarios where you can do a rental and make a profit and you can do a flip and make a profit because that's going to be your safest bet because like I said, if you buy a house and for whatever reason your life circumstances changes, you can flip the house. Okay, so that's my recommendation overall. um, so anyway, start with flips if you're just getting started and you don't have money, but be prepared to hold if necessary. Now, if you're starting, like in my scenario, I had a business already going, I had money saved up, I jumped right into doing buy and hold. But once your cash supply is good, look to build wealth through buying long-term rental properties. And that's how you build wealth and at the right time. Like I know some gentlemen that I met through my travels that they were traveling the world, right, having fun. They were a little older, and I said, how did you get the money to be able to travel like this and enjoy life like this, and you're not worrying about manning a business back at home like me? And they would say, well, I got into real estate, I bought a bunch of properties, and now that I'm older, I don't need all of them, and I'm selling them off, and I take the cash and I'm just having fun. I was like, you know what? Real estate is the right. So I was very happy that I had got into real estate when I'm, meeting other people around the world that are traveling and having fun in their upper age. And the reason why is because they invested in real estate and actually buying and holding. And then instead of like a quick fix and flip, they just flipped it years and years later where you can really maximize the profit on your initial investment. So that's my spiel, my lecture on should you fix and flip or buy and hold when you get started in real estate. So hopefully this was a clear lesson. And if you got questions, hit me up, get@willmotivation.com.